Hello everybody, welcome back. This is a very fun video that I've been looking forward to doing in a while, and restaurant stocks have absolutely getting fried harder than Joe Biden's brain recently. So today I'm going to be ranking some of the best and worst restaurant stocks that are publicly listed. So Chick-fil-A will not be on here. I'm going to be ranking these by the quality of the company itself, how they produce free cash flow, and I'm not including the valuation in here, so it's just based off the quality itself. Some of these stocks I own, some of these I don't, so it's going to be an unbiased perspective. Let's get into the video.
Hello, I like money.
First, we have McDonald's, Mickey D's, which has actually been one of the leading stocks that have been trading down recently, and I may or may not have added to my position today. McDonald's, I believe, is S tier for sure. McDonald's is a pioneer of fast food. They're one of the most well-recognized brands amongst the entire world. Anywhere you go, you want the American dining experience, go to McDonald's. Its unique business structure and the franchisees and how they give them fees essentially has them acting as a real estate company, probably one of the oldest things you've been hearing on finance YouTube. But it's an awesome business, but the valuation definitely is a bit of a question mark for it, as their growth is a bit of another question mark for it as well. See, McDonald's is so saturated, some can make the argument that there's limited growth ahead for it. 9 months ago, I made a stock analysis video on McDonald's, and looking at its DCFs and doing free cash flow valuations, essentially it's pretty overpriced still. Now, you obviously got to factor in that they have a crazy brand, the moat associated with McDonald's and all of that. That's obviously going to play into the valuation. But still, looking at even today's price, that could be like around the mid-range of valuation. But right now, analysts even have a low price estimate of $280 for McDonald's. It's a little bit above where the $240 mark is at right now. Is the Cosmics hype real? Who knows? Are they really going to compete with Starbucks and Dutch Bros? Who knows? I'm not having that really big part of my investment thesis with it. It's an awesome company. Prints free cash flow, and I think it's at a fair valuation right now, maybe even undervalued. Next, we have Papa John's, and I put Papa John's in B tier. Now, I only did it, of course, because SoFi Boy Major Speed, which is one of my only channel members, owns this stock, and of course, I have to have a little bias against it. But I did do a Papa John's analysis video a few months ago. It looked decent on the bare front, but I really don't know much about it on a deeper level. Its financials look alright, but I definitely do think it's a value play. It could have easily gone in C tier, but I was generous and I put it in B tier. It's an alright company, nothing to write to the man about. Next, we have Domino's, and Domino's I put in S tier, which could be an unpopular opinion. Unlike some other people, I actually think Domino's pizza, especially the personal pan-made quality pizza they have, is really good. And the cheese bread is the bomb, so of course I'm putting it in S tier. But in all seriousness, I was looking at buying this company last summer when it was trading near $380, and I never pulled the trigger. It's now trading about $100 higher from than it was there now, which just shows to show why you shouldn't try and time the market. But still, one could make the argument Domino's is overvalued. But it is trading down 4% today, and I would look to buy again if it went back to those levels. Domino's is a tech company that happens to sell pizza. It's an absolute pioneer when it comes to the delivery space and online mobile ordering. I really like what they're doing with automation and AI and really integrating that, and I think that they'll be able to continue integrating technology into pizza and ordering in the online experience. I definitely love to add this company one time, but I already do own a lot of restaurant stocks. Let me know what price you guys would like to buy Domino's at, and maybe I'll buy some with you guys. Alright, another unpopular one, but Chipotle, I put in A tier, and the reason that it's not an S tier with Domino's and McDonald's, because I haven't seen enough longevity with them. They've been really doing the right things over the last 5 years. Stores are always packed, demand is very high, and people are now coming into their stores with phones and recording employees so they get better portions. That leads to increased demand and more people going to the restaurants at the end of the day. Still, the valuation's absolutely insane for this company. I haven't seen enough longevity with them, too. It's kind of like the Crocs thing. I've seen a lot of good things that they've been doing in the last few years. Lots of demand, very trendy, but who knows? How is that going to hold up long term? That's a big concern that I do have with Chipotle. It's an awesome company, but it'd have to be at the right price. That's why it's going at A tier. They're doing the right things right now, though. And I think the multiple can definitely be questioned for them. Next, we have Texas Roadhouse, and I put this company in S tier for sure. Their execution, their business model is just very simple, and it works, just to be completely blunt with you guys. I have a very small position in Texas Roadhouse, and I have some insane gains right now. Like, I actually can't believe it for a restaurant company. It shows what a simple business model can really do. I bought it $105 per share, and I regret not buying it $90, but it really doesn't matter now looking at the price. It's absolutely insane. Unfortunately, I can't actually eat there because I have a peanut allergy, but I would love to go there one day. From what I heard, the food is really good, and this company is growing at a really rapid pace. But the valuation, once again, is a bit of a question mark with the crazy growth they've had. Will it come down to earth one day? I'd love to buy more. Next, we have Dutch Bros, which is an opt to the Starbucks cult, so of course I'm putting it in C tier. Look, Dutch Bros can't even produce free cash flow right now. They couldn't produce it if they had a green crayon and a white piece of paper. Look, in all seriousness though, with Dutch Bros, there's just not enough longevity. It seems like a very trendy place. Nowhere near the scale of McDonald's, Domino's, Texas Roadhouse, Chipotle, even Papa John's. I guess there's growth potential with it, but I don't really see them having any crazy competitive advantage over a company like Starbucks, Dunkin', or even McDonald's. Alright, next a company that of course should be above S tier, but we're going to put it in S tier for now, which is Starbucks, stock ticker SBUX. Now, if you guys have not watched the channel before, go watch my Starbucks playlist if you're interested in the company whatsoever. I am the Starbucks cult leader. I recently made a video of why Starbucks' business model is so revolutionary and reaffirm my thesis. But with Starbucks right now, they are facing some very real issues. I think they overhyped the prices. They juiced that pricing power just a little more than they could squeeze. They had a rough quarter, but I do believe that they're poised for a good recovery quarter. And of course, I'm not investing quarters for quarters. I'm investing for years. Long term, eventually the company will reappropriate to its fair valuation. People are going to see the kind of brand value they have, the kind of reoccurring customer base they have, the margins, everything that's so great about the company. For now, though, Starbucks offers interesting value along with some really quality growth if the China plans go through. Starbucks is one of the other restaurant companies being hurt by inflation right now, and I do believe long term, as inflation is eventually going to come down to normal prices, this is literally the optimal time to be buying restaurant companies that are being hurt by inflation. But Starbucks, of course, is going to be S tier. Next, we have Wendy's, and I really don't see the appeal with this company. It's the little brother of McDonald's. Qualitatively, there's nothing special about it except the Frosties and the Baconator, which I must say is pretty good. But looking at the company's financials, it is absolutely nothing to write home about for me. I guess you can consider a value play. They've been producing free cash flow for the last couple of quarters. But compared to some of the other companies on this list, I don't think it really does justice, so I'm putting it in D tier for now. You just wonder where the growth is going to come from with the company, what makes them unique over the long term, and I just struggle to find it with them. Next, we have RBI, which is Restaurant Brands International, which is a very interesting one. They own Tim Hortons, Burger King, Popeyes, and some other fast food chains, and it's honestly a pretty decent company. I'll always have a soft spot for Tim Hortons in my heart, and the company's financials and performance are not terrible. I think they have some unique restaurants and some unique brands, and Bill Ackman also does own the company. It's solid. I probably won't be investing unless it goes on a crazy dip, and nothing changes in the business's quality. And lastly, we have Brinker, stock ticker EAT, which Dissector was all over today, so of course I had to put it in here. And they own Chili's, and honestly, I don't really see the appeal of this company whatsoever. Its stock price goes up, the free cash flows go down. I don't get it at all. It's a seeking alpha quant pick. I'm sure somebody's going to correct me in the comment section, but from a bare thesis here, I don't really see much special about the company. I don't think Chili's has any competitive advantage over any other restaurant, to be honest. On a bare look at its free cash flows, it just seems very inconsistent, and I'm sure they could be doing capex or something. I did a very bare look, but I don't really see Chili's being the crazy restaurant player like Texas Roadhouse, Starbucks, McDonald's, Chipotle, Domino's, you know what I mean? So I put it in the middle of C and D tier. I don't know which one to put it in. I hope you guys enjoyed this video. It was honestly pretty fun to make. If you want to see more ranking videos like this, let me know in the comment section. Overall, though, I think with restaurant companies, it's very easy to nitpick performance, especially in a time with inflation right now and how that's impacting its price performance over the last 5 years. And I think right now, if you do pick the right restaurant companies, you're getting in at a solid price. But there are still premiums around the market, and you're going to have to do your own personal due diligence on them. Thank you all for watching. Smash the like button, subscribe, and do dividend stocks, not drugs. Have a good one.